Today's top three things: number one, the VIX; number two, the price of oil; and number three, gold. First, on the VIX, you had a massive move last week. You had a 46% move in front-month VIX. So again, fear ramping expeditiously to the upside, up 55%, don't forget, for the year-to-date, with the Russell 2000 down almost 10% now for the year-to-date. And the Russell, obviously, is in the middle of a 12% drawdown. So do people fear it? Yes. Should they fear it? Absolutely. We call it volatility's asymmetry. We actually made that call at the beginning of July, saying that volatility could, of course, ramp, and aggressively so, off the all-time lows of volatility in the equity market. Now, the second point would be in oil. This is a classic quad 4 move. So again, it's called deflation. Deflation, deflation, deflation. You can see this, obviously, on your screen this morning. After a 4.4% drop last week, the price of WTI crude drops another 2% this morning, probing its lows. No, you don't buy a falling knife in the face of that. Yes, it can be oversold, so maybe you do buy it. But the point is that hedge funds have been buying this. You know, you have a net long position in CFTC futures and options contracts on the order of 300,000 net long contracts. So again, that's come down from 400,000, but that's still pretty net long. Because guess what? People are still long the mother of all 0% interest rate policy carry trades. That's a mouthful. Gold, finally. It's not the best place to be in quad 4, but it's certainly not the worst. Again, one of the best places to be, of course, would be in cash, then treasuries, then munis, then consumer staple stocks. But gold, you know, you'll eventually get to that. It had a good week last week. It was up 2.4% on the week after a very newsy week in the week prior. I think my buddy Joey at BI just was stomping all over it negatively at the lows. But the point is that that's how gold trades. It trades on sentiment. And again, if you can get back above 1235, I do think that you could get a more demonstrable breakout in gold. What would you need to see? You'd need to see the river card from the Fed, which is getting easier. This weekend, Fisher came out at the IMF meeting being about as dovish as I've seen him, and he's not predisposed to be as dovish as Janet, but he sounded pretty dovish to me. So looking at gold with a bullish bias, again, on the pullback, closer to 1210 or 1195 is kind of the sweet spot to buy gold, and has been for about a year. And those are your top three things.